everybody. Collier Swecker in Birmingham, Alabama. Hope everybody's having an awesome day. Wanted to share with everybody an interesting statistic, and maybe if you're looking to actually buy a home right now, to give you a little incentive to do so, because if you're like me, you like to model people that are more successful and are doing the right things. And what I mean by this is Steve Harney's Keeping Current Matters blog brought up an interesting statistic yesterday, and it was this. It said that if you look at the number of homes sold in 2010, the number of $1 million plus homes rose nearly 18% from the previous year, when in the previous 4 years they had always declined year over year, which was interesting. You know, obviously the market, the economy, and that sort of thing. But what was interesting is interest rates have fallen to a level that where we're finding jumbo loans, for instance, that, you know, over $417,000 roughly here in Alabama. The rates on those used to be a gap of nearly 2%, for instance, and now, because they would charge you more to get that big of a loan, almost 1.5%, 2% more. But now the gap's maybe about 0.5% to 0.75% more, so it's a lot cheaper. The other thing is there's a lot of regulation that's coming out by Congress. They're talking about doing away, for instance, with a 30-year mortgage. Some folks are. I don't know if that's going to happen. But the acquisition cost as a toll will have to, the government's going to do something to change the way businesses run in terms of your closing costs and trying to make it a little bit harder for people to get into housing. I really believe that, because they don't want to repeat of the housing problem we've had. But what I think happens is that the rich people, who I believe are rich because they keep doing the things that made them rich. They don't do the crazy things. They don't get into debt in other ways that they shouldn't, like credit card debt, revolving debt, and that sort of thing. But what they do is they really study, and they understand that the actual cost of buying these homes is a lot cheaper now than it ever will be if the government gets more involved. So they're going out in mass and going ahead and making purchases that they may otherwise have waited, but they understand that the cost will change, and regardless of price is good right now. We're back at nearly O2 pricing, so they know that they got a good price. But ultimately, what it's getting them off the fence is that the cost of actually purchasing the property, all the fees involved, the fact that they can leverage more with a 30-year mortgage than, say, if they had to with a 20-year mortgage. You got jumbo rates that are lower. You got government related fees that are low, that there may come a time when we're paying a different type of tax maybe at closing. So all these things add up to the perfect time to buy, and they look at the total investment. It's refreshing when we have folks that take their acquisition costs and they actually add that to their basis. You may have paid $200,000 for it, but those $5,000 in closing costs you paid in addition to that was a real cost. So you really paid $205,000 for that house, if you will. You might say, well, this is only for the $1 million houses. And I don't think it is. I think all those regulations, all those costs are going to trickle down if they come into effect. And the fact is, it's cheaper now than it will be in the future to buy any home, in terms of the cost of acquisition and that sort of thing. So keep that in mind, that there is a difference between the cost and price. Price is very important, but in many cases, the actual cost that it takes to get the property will make all the difference in the world in making it a good or a bad investment. If you got questions or you disagree with anything I've had to say, email me. Collier@megaagentrealestate.com. Have an awesome day.